Good morning, everybody. We are going live with Mike Wade in 5, 4, 3, 2.
Good morning, everybody. It's that time of the week. As you can see, I'm in a different place. I'm at my mom's house for the holidays. I'm just coming out of COVID. It's been a couple of weird weeks. We did have the holidays. So, this is our first uh, high probability short term profit show in a couple of weeks. And as you'll see in a few minutes, we're doing really well. We have currently, let me get my data out here, 91% wins, and our average profit is 10.92% every 6 days. And currently we are on a 10 winning trade streak. So things are moving in our direction. System's performing as it normally does. Today we're going to take a look at the markets. There's a couple of big companies. A lot of the stocks you know about are all really starting to take off. So we're going to talk about that a little bit this morning. Take a look at our portfolio that I just sort of highlighted. And we have 5 winning trades from the last time we got together to talk about briefly. There's a current trade or two that I'm looking at. If you have any stocks you're looking at, though, of course, please feel free to pop them in the chat box below. And my wingman here, Amin, who's filling in for Ryan today, will bring those to the table here a bit later in the show. So let's start with this graphic. It's called a heat map, and you can get heat maps in a lot of places. This one is from a place called FinViz, and this is free. And what's really cool about it is it shows you in colors stocks that are bullish and stocks that are the most bearish. The brighter the green, the more bullish. The brighter the red, the more bearish. And the size of the box equates to the size of the company in terms of, we call it market cap or value of the company on the stock market. This is the S&P 500 weightings. And you can see here that NVIDIA, Amazon, Apple was up. This is what it was yesterday. This is yesterday's one-day move. Money has flown into Tesla and Google. They're now at all-time highs. Possible sniper candidates on those. We might take a look at some of those today. NVIDIA is starting to make another run. Netflix, Amazon. So, tech is hot, and I'm going to show you how hot tech is. We're going to go right to a chart of the Qs. This is the ETF that tracks the NASDAQ 100. And guess what? The Qs, the NASDAQ 100 reached all-time highs yesterday. So money is flowing into tech. Meta, Google, Tesla, Amazon, NVIDIA now finally again, money's flowing into tech, all-time high territory on the NASDAQ. So, what's important for us as snipers is, well, market direction is not really critical, but it's nice if we have a solid market direction. If I happen to find a tech stock that fits the sniper rules for a bullish tech stock, then I'm going to be more likely to take it because the overall market is bullish. The tech sector is bullish. Now, we can also take a look at the S&P 500, which isn't as weighted towards tech, although is weighted somewhat towards tech. And here's the S&P 500. And you can see here we are wrestling, dancing with all-time high territory on the SPYs. So the SPYs are at all-time highs or close to. The diamonds, the Dow Jones Industrial Average has come down a little bit. I would anticipate that this trend will continue after we bounce off 440 or so here. I'm expecting us to make a strong run across all of the markets between now and the end of the year. I'm going to show you something here in a minute. I just remembered something I want to show you. It just occurred to me to show you this. I will in a minute. Here's the small caps, the Russell 2000, the 2000 smallest market cap companies, and 245 up here, all-time high territory. So all of the 4 major markets are all either at or within a stone's or a hair, let's call it, of all-time high territory. So let's talk a little bit about, I'm in the Hub software, and a lot of you have the Hub software out there, I know, but there's a thing called Money Calendar, and this comes from Tom Gentile's community, and it's a really cool seasonal historic view of how markets perform. in this case, December, and notice how green December is over the last 10 years. This is a bullish month in the stock market. So we can anticipate further upside just based on history. We also have the Santa Claus rally, which officially starts on December the 26th, and markets typically rise about 1.3%. The SPYs rush about up about 1.3% from the day after Christmas all the way to New Year's, the day after New Year's, January the 2nd, the first trading day in January. Markets are bullish. So across the board, anybody and their mama would say that the markets are probably going to head up between now and the end of the year. So let's count on that happening. History doesn't always repeat, but most of the time it does. Let's take a look at our portfolio really quickly. We've got 9 minutes before the market opens, and these are a handful, 5 trades that we've placed in mid to late November. And again, we've had the last 2 weeks off, so we don't have any new trades in December or the last week of November. But we do have 5 winners. Disney was a winner. Pinduoduo was a one-day winner. Sedge Solar Edge was a solar company that we were bearish on for lots of good reasons. That was a winner. Snowflake, we put on Pinduoduo and Snowflake. The last show we had, both of those trades came off, within a day or two right after we got in. Snow was a one-day winner actually, and then TAN, which is a solar ETF, was also a winner. So we are, as I mentioned before, operating at a really nice clip. 91% wins, 51 wins out of 56, 5 losers. Our average hold time is 6 days, and every 6 days on average, with losers considered, we're making about 10.92% this year. All right. Now, the sniper system is make a little bit, but almost always make it. Like 90% of the time, make 10%, 10.92%. And actually, that's the average. That incorporates the 1 out of 10 losers that we have. So think about it this way: you could take an initial risk. Ours was 369 this year, and you could take that money. You can make your 10.92%, be out of the trade in 6 days, and then reuse that money, at least 4 times during the month. And then these numbers really stack up really well. So it's really about getting on base, getting on base, getting on base. Don't get struck out. We don't need any home runs. Just grab a little bit, get in, get out, and that's the sniper approach. Okay. Now, I think, Amin, what I want to do now, normally we talk about the guide at the end, but I'm about to take a look at some credit spreads. And credit spreads are not a novice strategy. They're a spread. They involve selling and buying 2 options in combination, and that's called a spread in the options world. And we've built this guide to help walk you through the 5 sniper steps, from identifying opportunities, from identifying what I call lines in the sand, which are support resistance levels, and then how to build a bullish credit spread, how to build a bearish credit spread, and then how to manage that and how to calculate the ROI and things of that nature. And then most importantly, step 5 is managing the trade with very discrete rules. So if you want the guidebook, there's a link below here, and you can just click the link, put in your name and email address, and we'll send you that guide. So grab that guide and then join me every Thursday at 9:15. We like to get in. We like to start the show 15 minutes before the market opens, because in the morning, if we can find stocks that have moved big on typically earnings, then we can come in and get a little bit more credit in the morning as the market opens, because of fervor, option traders coming in trying to trade the options, and all that extra volume and interest in options lifts their prices. And because we're effectively selling options, we're net sellers of options. That's a good thing, because we're selling options that are really extra expensive, and that adds to our credit, the amount of money we can make. So that is how we do it. Let's take a look, Amin, at our love sack graphic. All right, so I wanted to show you this one. I'm not sure that we're going to be able to get a trade off on this one for reasons you'll discover in a minute. But I did want to use this example because this is the ideal kind of news. This is the ideal news. Love sack. I don't know if you've seen them on the infomercials, but these are really big beanbag, beautiful beanbag chairs, and they do other things besides that. But anyway, pre-market, the stock's down 20% after lowering their FY25 outlook and missed on revenue estimates. So they missed on revenue and they missed and lowered. Q3 loss, net loss widens, net sales fall, fiscal outlook lowered. So this is ideal. This is bad news, right? So the company is down really big on they messed up in the past and the future's not going to be as good as they said before, and so there's really not a lot of reason for this company to rise from here, and that's all we need. And I'm going to go into a chart of Lovesac here and show you what it actually looks like. The symbol is love. And am I the only one here that has the B-52's Love Shack song going through your head? I do. I really do. All right, so here's a hub chart, and this is what Love was doing yesterday night. It was trading 37.68, and now it's at somewhere between 27.65 and 29.52. So it's trading around probably 29 to start the market. So it's trading right where my pointer is. Now, anything can happen after it opens at about 28 or 29. It's going to open here and then it's going to do something. What's it going to do? Well, it's either going to go sideways, it's going to drop, or it might recover. All right. Now, all I need it to do is not recover too much if you follow the sniper approach. So what I want to do here on this one is derive a line in the sand. And I'm seeing right here, maybe at the top of these bars here. All right, so I'm just looking at the top of these bars and I'm just trying to find a round number at which if I could put a trade on that would make money below this annual high for the stock. If I could get a trade here, maybe that's 38. Let's see, that's 39. Let me edit this line here and show you. This is the line in the sand I would like to have. So this would be 39. I need to check the strikes and all that stuff. But ideally, here's the idea of the trade. All right, so the stock, even before the crappy earnings, wasn't able to get above 39. That's this line in the sand. That corresponds exactly to 39. The stock's now down at 29, 28, somewhere in here. Is the stock, with this bad news and this anchor around its neck of lowering future guidance, is the stock going to recover above the red line, which is the 50-day average, and then above 32.50, and then above 35, and then above 39? I doubt it. I doubt it. It could recover a little bit or even a lot, and I still don't see it above 39. And there's the stock. It's just opened here, and it's starting to run down. Now, I don't know what we're going to be able to get at 39, but I'm going to go find out. I'm going to go into a Thinkorswim simulated environment. I'm going to type in the symbol for love. And now here's one of the drawbacks of love. Its options expire monthly. So if you look right to the left of my little crosshair there, the red crosshair, these are 8-day options. And then I also have 36-day options. I don't have 15-day options. I don't have 22-day options. I only have monthly options. There's no weeklies, in other words. So I'm going to be forced, because I don't like to go over 21 days on these trades, short-term high probability profits. So we're going to have to go with 8. And then I can start looking and seeing what kind of strikes I have. And if I want to sell at 29, the closest I'm going to be able to get is 30. And I'm seeing 52 cents credit there. I don't know if we're going to be able to get it, but we can certainly try. So I'm going to try for it. This is a 5-point spread, 30-35, and currently it's going for 50. I got to hurry. I'll show you this trade here in a minute. So selling the December 2030s, buying the 35s. Hurry. This credit will be gone. And I just got it. All right, so that just filled. Let me show you the trade. And then I'm going to put it back on the chart here. So our symbol on this trade is love. And let me show you where the filled order is here. It shows a 90-cent fill. I think that's generous. All you really need on this one is 50 cents, 10% of the spread width, which is $5. So 10% of $5 is 50 cents. That's minimum. So December 20 is the expiration date. And we sold the 30 calls. And then we bought the 35 calls above. And you want to do that for no less than 50 cents. So try for 50, maybe try for a bit more. I just got 90 in a simulated. Sometimes those prices are a little more liberal than you can get in a live account. And I got 90. I'll track it at 90, but track it at whatever you get it. So here's the trade, 30-35 for 50 cents. All right, so this is the actual order. Sell to open, the love. If I put the right month in here. I was getting I was in my head, I'm using Australia format because the hub software uses Australian date format, which is different from the United States. Anyway, so here it is, December 20, 30 call, buy the 35 call, 50-cent net credit at least. And then once you're in, you want to do two things. One, immediately put an order in to buy the spread back for 10% of the original credit and specify GTC. Let me do that here quickly for you. So I'm going to right click this and create, let me try that again, create the opposite order. So let me just give you a little bit of education here. So we want to put an order in to buy the spread back. So we sold it for 50 cents. We want to buy it back for 5 cents. That's 10% of 50 cents. And if we're able to buy this back for 5 cents, having already sold it for 50, then we'll net 45 cents of credit, or 90% of the maximum potential profit in the trade, which was our original credit. All right, so to close the spread, you buy back the 30 that you originally sold, you sell the 35 call that you originally bought, and that will be a debit. And in the event it's ever worth 5 cents, you'll be able to pull this trade off automatically. And then I confirm and send, and then I don't have to worry about taking profit. The only thing I've got to worry about is if the stock rises and closes above 30, then I close. If the stock is above 30 at market close, buy it back before the market closes. So 10 minutes, 15 minutes before, if you see that love is above 30, then close it down before the market closes. So on market close it out if the stock's above 30. All right. Now, let me take you back to the trade. Now, look, Lovesack's starting to bounce. That's okay. It can, our trade is way up. Well, it's actually right here. So this is where our trade is. So the stock's starting to make a run. This is as close as I'd want to get on this trade. And the stock is now dancing with 30. Look left on this chart. Please look left on this chart. And right at 30, you're going to notice that there's resistance here, resistance. Even today, that resistance level is holding. And I would imagine I expect that the stock will stay below 30. And then even if it does break above 30, it's then got to get above the 50-day average and then 32.50. And then we might get into a bit of hot water up there at 35. So we're done. All I got to do now is, as long as the stock is below 35, and I don't think it's going to get above 30, but as long as it's below 35, don't do anything with it. And if the stock um, does close above 35, then shut the trade down. All right, I'm in. Let's check out our Q&A. Do we have any stocks from our audience to take a look at this morning?
Yeah, Mark. James requested Tesla right as you opened the show, and followed by Nick, who requested Adobe.
All right, let's take a look at Tesla. Yeah, I like Tesla. It's one of those ones that's setting all-time highs. Now, what's missing for the snipers here is that we don't have any specific news for today on Tesla. So we don't. The sniper wouldn't have this as a good opportunity because we don't have any solid news for today. Typically, that news is earnings. So 350 would be a good level. I'd say 400. What I don't like about well, first off, I think that this stock probably has further upside. I think it's probably going to stay above 400. Um, but we've had this big run and pullbacks happen. Now, had we caught Tesla, let's say right here, where there was a resistance level, we call that a basing pattern. Had we caught it here, then we would have, that would have been a really good time to catch it because it breaks resistance, and it did so as volume started rising. So I like this at maybe 350 or 360, because we got to give it a chance to take a little bit of a break, but we don't want to get into trouble. So I like this one maybe at 360. So selling the 360 put and buying the underlying put on Tesla. And what was the other one, buddy?
Nick requested Adobe, and David requested the Roblox. And then there is
All
actually
right.
a question that you could address.
Yeah, let's take a look at Adobe here. Yeah, I was looking at Adobe, and we're going to take a look at this one. So obviously you can see here that Adobe was at 550, and then it dropped all the way down to 488. All right, why? Well, earnings. And I'm going to hop into check the news. News is a really important piece of snipers. So the stock's obviously down big, but I want there to be some bad news. There's going to be. And I want that news to be bad. I don't want the stock to have any chance of coming back up. And let me type in the symbol, ADBE, and let's just take a look. once it comes back here, let me try it. There it is. We got it. All right. Adobe shares slide as revenue forecast misses expectations, AI competition looms. So they lowered their guidance. Let's see what else. Annual forecast triggers concerns. Okay, now here's the thing about this one. And this is why I didn't lead with Adobe. Adobe had strong earnings. All right, so they beat and they lowered. I'd rather see they missed on the past, on their EPS, on their earnings announcement. They missed historically and they lowered in the future. That's like a double, cross and uppercut. And that's what I would rather have. And when I see this, I think there's more chance, because they've had strong earnings, there's more chance of a bounce, meaning the stock may rise. So let's go see what it's doing actually. And you can see here that the stock has come down and it's pretty much where it opened. It tried to make a run up and then failed. We do have support on this one right down here. Look left, 475. There's some support there. So that will very likely keep the stock from dropping below because they beat on their earnings. Um, yeah, so now we have to figure out, well, is the stock going to bounce? Because I've been noticing lately that companies come out with even beat and raise and they drop sometimes or they go the other way. So I want to be careful on this one. I would say 550. If you can get any credit up here at 550, then that would be a good place to consider selling a 550 call and then buying the next higher strike call and go out 2 weeks. Let's just quickly check on Adobe's options here. I'll do one with you. So this one has weekly options. Now, the sweet spot is typically 2 week options, 15 days in this case. And so I'm just going to quickly check to see if we sold at 550, would there be any credit there? And I can see here that there's not enough. At 550 for December 27, I'm only seeing 17 cents. And I need at least 10% of the spread width, which is $5. So I need 50 cents, and that's 17 cents. That's not enough. So then I could say, all right, we'll add one more week of time. And even if you go out to Jan 3rd, which is 22 days, even the 22 dayers, there's only 30 cents there. We need 50. So we're 12 cents, 22 cents away from that. So all that, what that means then is we have to consider dropping our line in the sand. All right. So what's going to keep the stock from rising? Well, 500 resistance will provide a level of resistance. Look over here. So that may keep the stock contained below 500. So that's a good level. We have the 50-day average, this curvy red line. We have the 200. We've got 525. Look left. Resistance, resistance, resistance at exactly 525. And then we could go up to these peaks. Look left, right about in here. That level there is let's call that 535. So that is as low as I'd want to get on this one. Well, maybe 525. 525 is as low as you want to get, but you could try for 530. Let's just see what's there at 530. So that's part of this game, is staying as far away as you can get and only going as close as you need to go. 530, not enough credit. That's December 27th. Let's go out to Jan 3rd. 530, 535. That's interesting. We can go to Jan 3, 530, 535. That would be a 22-day trade. That's the kind of a limit for me, showing 71 cents. And that would put us our line in the sand right here. I like this one. Let's do this one. So 530 is right here. Let me edit this trade and make it 530 exactly. So the idea on this trade then is we're going to make money anywhere below 530. And for us to get into trouble, the stock's going to have to recover across many moving averages, including 525. So let's go get this one. Actually, you know what? I'm going to try going up one strike. I want to go up one more strike. So 530. There's five. Let's try 535 again. No, well, wait a minute. 535 would be a little bit better, but there's only 37 cents credit. So we're going to have to go with 530. That's showing a 67-cent credit. We'll do one contract. Here it is. Sell one Adobe 530 call. Buy one Adobe 535 call. Showing a 67-cent credit. That needs to be a minimum of 50 cents. Let's go ahead and throw that in there. I'm asking 66. The mark showing 66 and a half. Let's take it down to 65 cents. And once I'm filled, I'll give you the actual legs. All right. It's down to 64, 63. Again, take note. Now it's down to close to 50. Let's drop it back down to 50, our minimum. And this is either going to fill or not. I'm not going to go any lower. I'm not going to go lower in price, lower in strike. And let me give you this order. All right, so we want the 530, 535 for Jan 3. 530. What was it again? It was Jan 3. And the short strike is 530 and 535. And you want at least 50 cents. So here's the order then on Adobe, and whoever put that up there, I think it was Nick. Good job, Nick. Really good opportunity. Sell to open the Adobe Jan 3 530 calls. Buy the 535s above, same stock, same expiration, of course. Get at least 50 cents, and then follow the rules right in the guidebook. Put a 10% order to buy it back, or 10% of the original credit, which was 50. It needs to be at least 50 GTC to buy it back for 5 cents. And then if the stock closes above 530, your line in the sand, close it down for a managed loss. All right, Amin, do we have any other quick questions? We can do one more stock or answer a question or two.
Um, there was David requested the Roblox,
Oh,
and
that's right.
someone asked, "What if Bank of Japan raises rates next week?" I don't know which one you want to address.
Let's go with Roblox first. Roblox. All right. Well, it's the stock's obviously in a bullish trend, and actually, I'm looking at the wrong charts here. I forgot which software I was playing with right now. Roblox. Let's take a look. It's certainly in a bullish posture, right? It's finding some resistance at 60. Um, I want to again with snipers. I like there to be news. Now I trade credit spreads without news, and this could be one of those. But let's just see if there's any recent news on Roblox. So I'm in Yahoo Finance, finance.yahoo.com, and then you type in the symbol, and then you can kind of see what's up. Undervaluing Roblox. Okay, there's an inquiry. Is Roblox undervalued? So that's just an inquiry. Just looking through here, I'm not seeing any immediate news on the stock. I think there's better companies than Roblox. It's finding some resistance at 60. This is an annual high, if not long. I'm probably longer, but I would like it above 60. But other than that, I wouldn't touch this one just yet. The other support level to look at is 55. All right, so I look at this going, well, man, it would have been good to catch it here as the stock gaps up above 55 and then sell underneath at 55. But because 60 is a round number, and for 2 days so far, maybe even 3 over here, this stock could very well come back down. So I would consider selling a 55 put spread if the stock closes above 60 on Roblox. Again, it doesn't have the news and the punch that I like for snipers. And then the other question was about the Bank of the Reserve in China lifting rates. What would that do?
What
Um,
if the banks of Japan raises rates next week?
oh, the banks of Japan raising rates next week. Yeah, I mean it could hurt Japanese companies. I don't think it's going to hurt. It's going to make too much of a difference on the overall markets, but it could. I don't. I don't. If it was China, it would be different. But Japan doesn't have as much of a influence on the global front, so I wouldn't be too worried. I wouldn't there. I'd expect there to be very little movement. Perhaps on Japanese companies, we could see those Japanese companies listed in the U.S. come down if that happens, and that's about the only thing I would expect if that does come to pass. All right, everybody. Well, another good call. We're going to have another one next week, and then it's the day after Christmas, the week after. So we'll be together once again. I think Ryan's coming back, Amin, or if you're here too, man, that's great too. But we'll be back together next Thursday at 9:15, and we'll snipe away. Have a good weekend, everybody. Grab the guidebook and join us every week. We do this, every week, and we're doing well. So have a great day, everybody. Have a nice weekend, and we'll see y'all next week. Same bad time, same bad channel. Bye, everybody.